We are here on Real Estate in the LowCountry. With me is Benji Gecy. We missed him last month because he's such a busy man around town, so welcome back.
Well, we got great news. 6 straight weeks of declining rates, Betsy.
Right.
So we're looking good right now. The 5.0 that I've been forecasting for about 7 or 8 months now, a lot of people thought I was crazy. We've hit that on the government loan. So we closed our first 5.0 on the VA, lots of 5.1s. But we're coming in right around 5.5, 5.7 on the conventional. So a little bit of room there. I'm still forecasting the conventional rates to hit 5.0 by the end of the year. But as you can see from the rate chart, the national average is 6.3%. So Beaufort lending, we're about 0.75% lower than the national average with rates right now. But lots of activities going on with these lower rates. Lots of consumers able to get into the market. Home prices are getting a little more affordable with lower rates. Good news across the market. So we've been keeping our fingers crossed for this for a while. So I'm glad to see that rates are going a little lower right now for sure.
Yeah. So before we started filming, you mentioned there might be another little bump though before we go down again. So now is kind of the time. If you are thinking about buying,
now is the time, everybody. I mean, we've had 6 straight weeks of declining rates. We've discussed this before. The rates don't go down in a straight line, so we're going to have a lot of peaks and valleys. Luckily, the last 6 weeks, we've had a slight decline to where we are right now, but expect a little bump up from here. And we're going to see some of those peaks and valleys before rates go lower. My forecast is a little lower rates by the end of the year. We're really close to where I think the market is comfortable, but could we go lower into 2025? I think so, but the rates are attractive right now. They're about a point lower than they were 6 weeks ago. So take advantage of it right now, lock in on that rate, especially those who bought over the last couple of years and have some elevated rates. So that's good advice right now.
Well, and that's what I was just going to say. So not talking just about buying, but maybe somebody wants to refinance right now. That's something we really haven't talked about in the last couple of years because there was no point.
That's right.
But now maybe there is.
Well, there's trillions of dollars of loans over 7% over the last 2 years. Those people are looking to refinance right now. My advice to you right now is take advantage of these rates. If rates go lower, that's even a bonus. But for somebody who bought a home at $600,000 at 7%, now they can go to 5.5%. The price of that home just got a lot more affordable. So take advantage of that. What we are seeing is people at 3.5%, they're starting to put their homes on the market and relocate and get another mortgage at 5 or 5.5%. So it goes both ways. For the person who bought a home, they're able to lower the rate, but the one who has that lower interest rate, they're now putting their home on the market and transitioning with those lower rates as well. So the whole market is benefiting from the lower rates right now.
Sure, well that obviously makes sense. Let's talk about some tips though. If somebody is looking to refinance, what should they be looking at? What do they need to know? What do they need to have in order?
Well, number one, you got to shop your rate. That's the most important advice that we can give to you, and you'd be very surprised with your local lender, credit union, what the difference are in rates there. So insurance, mortgages, I would chop it around a little bit and just see what the competition is out there. So that's number one. Number two is know what your credit score is. Credit scores play a big role in what rate you can get. The higher the credit score, a little better the rate can be there. So also kind of know what your value is on your home. You can do a lot of electronic evaluations right now. Check out that loan to value there. The higher the loan to value, the higher the rate's going to be. If you got a lower loan to value, you could benefit from an extremely lower rate with a higher credit score. So those are some good tips right there. So know what your credit score is, shop your rate, and then check your value out there. And then quick, debt to income ratios, you can do that yourself. Take your gross income, and as long as you're 50% or below with your debts, you're probably going to qualify for everything there. That includes your mortgage payment and everything that reports on your credit bureau. So keep that in mind before you start shopping. But my number one tip is know what your credit score is before you go to apply, because that's one of the number one things you need to look for.
Sure. And we've got about a minute left, so let's talk a little bit about the credit score, because maybe somebody's not ready right now. They think, oh, it's not quite good enough, but they're going with your prediction that they're going to be lower in the start of the year. What are some things they can do to get ready to take advantage of it again when that happens?
Well, you can start paying your credit cards down, get those revolving balances below 20%. That's going to increase your credit score. If you've had any late payments in the last 12 months, you definitely want to get 12 months past the late payment. But the quickest way to turn your credit around is to pay the revolving debt down. 680 or higher is going to get you some of the best rates on the market. 780 and above, you're going to get a little better rate there as well. But 680 to 700, as long as you're in that range, you're going to get some of the best rates on the market right now.
Excellent advice. Thank you so much, Benji. And we'll look forward to next month when we see how this prediction goes for the rest of the year.
I'll be here next month.
Okay.
I'm going to deliver good news next month as well.
Sounds good. Thanks, Benji.